I'm not here ready to sit here and say, look, the traditional banking model is dead.
We hear a lot about embedded finance. What is it?
You get into Uber car, you step out, and payment just happens magically. That's embedded finance. Well, it's not.
Banks obviously need to catch up.
We are talking about modular components available as APIs.
What happens if a bank does nothing?
But it is happening. It's that ecosystem is opening up, and if you're not thinking about what that means for you, you will be missing out.
Hello everybody, welcome to OpenWay Club. My name is Rob Manderson and I'm the Director of Partnerships. I'm sorry we can't be there today, but I'm here to welcome our colleague Gilles from Celent to talk about embedded finance. Gilles, please say hello to everybody, introduce yourself and explain what we're here to do today.
Hi Rob, delighted to be here today. Unfortunately not in person, but at least on video. Thank you for having me. So my name is Gilles Bareisis. I lead the retail banking team here at Celent. We are an industry and research firm. We focus on financial services technology. So we work with banks, the technology and service providers, investors, the entire community to help them understand how technology is changing and how they can make the best use of it.
Thank you. So we hear a lot about embedded finance. What is it? Can you tell our participants today some examples?
Yeah, so it's a great question. So actually, that's one of the reasons why we wrote this report a few months ago called Embedded Finance, or Demystifying Embedded Finance, the Promise and Peril for Banks. Because when we looked at what's happening in the industry, it's clearly a very hot topic. Everybody's talking about it. But we felt that there was a little bit of a looseness in definition. I think almost anything becomes embedded finance, and I don't think it's helpful. A lot of the conversations that we've seen so far happening around embedded finance is from the disruptive perspective. All these new companies that are coming in and promising to eat the bank's lunch. We wanted, because a lot of our clients are banks and companies that work with banks, we wanted to make sure that we take a bank's perspective and say, okay, how can banks participate in embedded finance? What does that mean for them? And embedded finance is really, I mean, the idea is not new. It's what's happening right now is that the ecosystem is opening up. Banks are far more willing to work with different companies, external parties, third parties. And the big question becomes is who's going to curate that customer experience? So let's say a bank that maybe has a lot of agricultural customers, they can help them understand, not just get the finance that they need, but also understand, what's the right time to sow the crops. So create information that maybe financial products sourced from other parties could even go beyond finance.
Sure.
But it's the bank that curates that experience. On the other hand, what you see, and particularly with open banking, you now have a situation where there's a lot of fintechs, third parties that can come in, and banks have to provide access to that data so that people can actually access their banking data through those third parties. Embedded finance for us is another step forward. I'll give you some examples of what we think is embedded finance and what we think it's not.
Right.
Quite often people say, oh, Uber. You get into Uber car, you step out, and payment just happens magically. That's embedded finance. Well, it's not really, because it's a card on file experience, right? As a customer, I didn't have to do anything. I just put my card on, and that card now sits with the Uber app, and it's a great experience. It's an invisible payment experience. I don't have to think about it. But from a bank point of view, there's no difference. You just issued me the card, and I'm using it like I would use with Netflix, with Amazon, with all the subscription services I might have. On the other hand, now an Uber driver that suddenly realizes that they could get away, they would like to have faster access to the funds that they earn during the day, and Uber decides to issue them a card that they can use immediately to get those funds and then start using it, whether to buy petrol or do something else.
Sure.
That Uber driver may not have had that card before because of Uber. So to us, that is actually a great example of how the need for financial services is recognized at that point of a third-party experience, and the banks are able to provide that.
Understood. That's great. How do you prepare for embedded finance? And in particular, we hear about banking as a service, things like this.
Yeah, so again, I think that's a great question because quite often we see that people tend to conflate banking as a service with embedded finance almost in the same sentence as if it's one and the same. Um, the distinction we want to draw is that for us, embedded finance is the what, banking as a service is quite often the how, but it's not exclusively. So it's one way of delivering banking as a service, embedded finance. So what is banking as a service, first of all? Banking as a service is basically is a modular, composable technology architecture and a way to, that we talk about three layers. One is kind of the orchestration layer. So it's the API integration. It's something that allows you to connect to those third parties. Right. Then it's the capabilities as a service layer, where now as a bank you're exposing specific set of capabilities that that third party can make use of, whether it's card issuing as a service, or whether it's payments as a service, or opening a bank account as a service. And it could be a product, it could be also a set of capabilities around origination, around the fraud management, around the operations, for example. And then you need a regulatory license. And the question is now then who brings all of those components and how do those components get combined? The reason I'm saying that this is not the only way to do it, because we've seen examples in the industry where clearly embedded finance type ideas, notions can be delivered without necessarily that full stack of capabilities.
Sure, sure. So Gilles, can you give us some examples of how banks can participate in embedded finance?
Absolutely. So in our research, we identified 5 different ways of how banks can engage. Wells Fargo, one of our winners of Embedded Finance Award actually for Model Bank, an award program that we run at Celent every year. What they've done is they worked with partners and they gave them a set of tools, technology tools, APIs, SDK, to embed a co-branded credit application right into the flow of their process. So let's say you might be on a hotel partner website and you're in the process of booking a hotel and you realize actually a co-branded card from them would give you great perks, great benefits, and you want to apply for it right there and then. In the past, you would have had to leave what you're doing now, go to the bank's website and try to apply for that, wait for a week or as long as it takes for the card to turn up and then come back to it. Now you can click the button, you can do the application right there and then within that flow, have it actually approved and use that new card to finish off that transaction. So you're getting a brand new product straight into in the flow, and it's a great way for the customer and then for the bank and their partner, right, to participate. The other approach is where you have these banking as a service type players that provide the technology, but they don't necessarily have the banking license. Some of the processors in the US, for example, other players, they focus on technology and they bring in banks to provide bid sponsorship or regulatory license components, and there's a lot of banks that are engaging in that way. Others actually say, well, you know what, we already have a license, we can build out the technology ourselves, so let's go to the market as a package, that banking as a service technology package as well as the license. How you go about it, again, can vary, can be very different, and there are different models there within that. So Solaris Bank in Germany, for example, it's really a fintech with a banking license. It's a banking as a service provider that has a banking license. In other cases, it's a large bank that might acquire a technology provider or might partner with another. So there are different ways of doing it. And the last couple of models are really where I think it gets really interesting and quite sophisticated, because it's not just about providing capabilities to others. It's about a bank partner coming up with a product that they want to launch in the market and coming to you and say, okay, how can we get this into the market? How can we get something for my consumers, the end consumers, so B2B2C model, or even potentially serving businesses through another business part. For more of the business end, Stripe Treasury is a great example. For those of you that may be not familiar with that, Stripe Treasury is the proposition for marketplaces, like Shopify is one of Stripe clients. And Shopify itself is a platform, is a marketplace that can bring a lot of small merchants that want to transact and come to Shopify on the platform to transact. And in that process, they may realize actually they could benefit from a bank account. So again, they can open that bank account or bank-like account right there and then through Stripe Treasury, through Shopify, through those partners, And there are banks that are supporting that proposition. Evolve Bank in the US, Barclays, Citi, all Goldman Sachs, all of them are involved in this.
Fantastic.
So very different ways of, different opportunities to participate.
And to succeed in embedded finance, banks obviously need to catch up and to move forward. What gaps do you see right now within the banking sector?
Well, so I think there's two ways to answer that. One is, there's an obvious one, right? The technology. I think a lot of banks don't necessarily have that technology that's needed today. So I think companies like OpenWay can certainly do a lot to help because we are talking about modular components available as APIs, available as a service, right? So that capability is needed, and I think a lot of banks need to take a hard look at what they have and what they need to really participate in that effectively. But it goes beyond that. It's a very different business model. It's a very different way of engaging with your customers. It's an acknowledgement that you may not have that customer as your customer, but it's
quite.
You're becoming a slightly distanced from it, right? And what kind of parties you want to work with, what are the good partners for you? It's a big strategic question, and to that question where I started talking earlier, who owns that customer experience? I think it's that kind of strategy and strategic thinking that every bank has to go through.
Of course. So, on that note, what do you think about the risks of embracing embedded finance are for a bank specifically, and how to protect them?
Well, so what I said is being distanced away from the customer, and depending on the specific arrangements and how it might work. Maybe you're losing some potential revenue opportunities. Maybe you're losing some data, right? So there's suddenly now the third party gets access to that data that you used to have yourself before. So there's always that risk. There are more immediate risks. There's a third party conduct risk. What if the partner to whom you're providing those capabilities? What if you don't like the way they behave? Right? So how do you vet those partners up front? How do you correct if anything happens midway through your partnership?
Sure.
So I think those are certainly the risks, but I think the biggest risk is that if you don't do anything at all.
Quite. That was my next question. So what happens if a bank does nothing?
I mean, we're not here. I'm not here ready to sit here and say, look, the traditional banking model is dead. You forget about getting customers through branches or through your own online banking portals. That you're not going to be able to get those customers that way. Embedded finance is the answer. It's not. It's as always with these things. These things evolve. These things take place. Take time to shake out. So. But it is happening. It's that ecosystem is opening up, and if you're not thinking about what that means for you, if you're not getting ready, if you're not preparing, if you're not getting your technology back office in order, you will be missing out. And I think you will miss out on opportunities, and others will come in and be more successful. And so I think the fear of missing out is not a valid strategic driver, but it's certainly an important driver.
So flipping that question on its head then, are there any first mover advantages to embracing this?
There are, because if you think about who will be those third parties that will control a lot of that experience, there's probably, it's quite easy to guess that there's going to be a handful of usual suspects, large tech firms, big brands, some niche specialists that might be focused on a very specific segment. I don't know, an example of a partner website that targets landlords that manage property portfolios, right? And then have very specific services for them. What kind of financial service opportunities do they need, and what can a bank provide? So if you miss out on some of these big opportunities, big partners, and if they have already banking partners, there's a risk that potentially in that model, you don't need a lot of banks to provide this. You just need the good ones and the big ones.
Quite. Well, that concludes my interview, my questions for this session. Do you have any parting comments for our audience and our clients?
I guess just to say thank you again for having me, for this opportunity. I know it's a really big and great event. I'm sure everybody will enjoy it. And I would say just go out, meet as many people as you can, listen to all the sessions, come away inspired and having made new connections, and stay healthy and successful.
Thank you.
Thank you.